What is going on, ladies and gentlemen? How are we all doing today? Happy Sunday. It's August 15th. We're approaching 1:30 p.m. Eastern Standard Time. We're about to do the weekly watch list. Let's get into this. What I want to cover on first before we get too far into this is adjusting to market conditions and the changes in the market as a trader. A lot of people struggle with because we let our egos get in the way. We get used to something for so long, and when it comes time for change, people don't like change. Just like in everyday life, get content with the job, doing the same route every single day. And if something comes into your life that throws off your routine, you don't like it. A lot of people, they like the same boring routine every single day. Waking up, living to work or living for the weekend, dreading Mondays. You're gonna realize so many, what's the word I'm trying to say here? Similarities in life roll over into the stock market. And I always love trying to use different comparison with personal life markets as a trader. Really have to be observant of what's going on, adjust, monitor your thoughts, work on yourself, growth. It's a never ending process. So at the beginning of August, I've told all of you guys my 6 years as a trader, August, September are usually the slowest months of the year. It's always been like that, always. I don't know why. Probably because we're ending summer. All the kids are going back to school. Parents getting their kids all ready for school, getting back to their daily routine. Every single year, it's been like this. August, September, it usually just dries up. Things get pretty slow. Then October, November, December, the last 3 months of the year, it really heats up, especially during Halloween season, October. That's when you'll start to see things pick up and heat up again. And then it'll go all the way up until Thanksgiving. Then it'll take a brief pause, and then we'll go into Christmas, Hanukkah, New Year's, and markets will be firing on all cylinders. And then before you know it, we're in January effect. Why do they call it January effect? All of these institutions, banks, hedge funds, traders, they're readjusting their portfolios, buying in on positions for the upcoming new year. So it's like they're resetting their books and getting on pace for the new year. So things this last week have been pretty slow. And I've noticed across the board, a lot of people have been struggling and they're failing to adapt to the market conditions. I've been doing this for some time now. I mean, to me, I can notice when things change. It might take me a day, maybe 2 days to adjust, but I cannot get stubborn and fight my ego. I gotta notice what's going on, make the adjustment, and continue carrying on. Because if you do not adjust, stock market will eat you up, take everything that you've made, and then you'll just be fighting a never-ending battle with yourself. Will. So it's just like when I call the stock market and the S&P 500. I call the S&P 500 mother, mom. Mother always knows best, right? So we're going to want to listen to mother and obey mother. Never talk back to mother. Always listen to what mother has to say and notice what she's doing and follow. That's what we do. Just like when you see ducks with the mama duck and all the little baby ducks following right behind. Same thing applies in the stock market. And if you wander off, you're going to get lost from the pack. And you're just going to fall down a drain or something. Walk over what do they call those water things in the street? Sewage. So I posted the weekly watch list. I'm going to do that right now. Discord. I don't really have too many stocks on watch going into next week. I kind of want to start fresh because of this new market cycle. We've have been seeing a lot of stocks fall off and really get driven down. Stocks like you guys all remember BTBT. This stock was in play for 10 straight days. Since then, things just got driven down. See, it had an epic run up all right here. This was the course of 10 days right here from $4 all the way up to a high of $32. And then it seemed like for 2 weeks straight, this thing just got driven into the ground. And then now we've had a nice rebound right here. So with it pulling back recently right here, I don't think that this is really going to get a bounce. I think it's just going to continue to get driven down lower and lower because this thing went so far for so long and other stocks are popping up. People are going to get trapped on this and the company is going to want to take profit off the table. I don't really think anything's going to happen with BTBT. Volume's going to dry up on it and it's just going to slowly just fizzle out. What I do want to pay my attention on though, and what we have been paying attention to, AMC. Well, I'm not jumping on the AMC bandwagon, getting caught up over my tongue here. But AMC has been offering a lot of really good day trading and trading opportunities. Many different opportunities. Every single day, this stock has been moving on average $3-4 at a time. And when you have a stock with range like that, that's opportunity. You have liquidity. You have volume in this thing every single day. I mean, just look at all the volume every single day on this stock. So you should have no problem getting in and out of this stock. Sure, it's had some nasty sell-offs, but when the stock's selling off, you gotta leave it alone, let it be. And when it finally wants to bounce, there's really good bounces. I mean, look at here. Thing went from 37.50 and it got driven all the way down to 29.50, having an $8 sell-off in 2 days. From 27 or 29.50, this thing bounced for 3 days to the upside. So from 29.50, it runs up to 31.50. That's a $2 per share opportunity to the upside. Then the next day, it goes from 30.50 all the way up to $34. So that's a $4 per share opportunity there on AMC. And then Friday, this runs from 32 all the way up to 34.50. So that's about a $2.50, $3 per share opportunity. I see opportunity. Stocks are moving like that. Whenever a stock has volume and it's moving more than $1-2 per share, I see opportunity. I really do. So with AMC bouncing like this, I think the first couple days next week, it's going to sell off again. Probably going to run back down. It's been really testing that $29-$30 a lot. Draw your support line there all day. It's getting driven down. And look at it like a jackhammer. Every single time it tests that support's getting weaker and weaker. So that floor is potentially about to fall out. And what have we been saying the last few weeks? It's looking like it's peering off. There's a lot of selling pressure in on this. And I feel sorry for the average Joe because they are the ones that are going to get hurt on this. They are. Falls through that 29. It's a big level. This thing's going to free fall all the way down to $20. That's a $10 per share, another drop down from its highs from 73 all the way down to 20 bucks. About a $50 per share to the downside. I feel sorry for anybody's holding this long term. That hurts. Really does. All this was a bounce. That's all that this was. That's why I'm saying going into next week, be prepared for more selling on AMC. It may run back down and retest those lows again. It may very well do that. Take it day by day with AMC. That's what you can do best. And every single day, like I've said, it's offered pretty good day trading opportunities, even swing trading opportunities. So not too long ago, we had Sava up on our watch list because this had a huge sell-off on the daily chart here. From $150, got driven all the way down to 64 bucks. We said keep this on watch for a bounce. And for 2 weeks straight, this went from 64 all the way back up over 100 to 125. This is a good, what, $70 bounce in 2 weeks? That's pretty good. Really good. So this would have been a phenomenal swing trade. Look what this did last week. All last week, you could see there was a high right here at 110 with that top. And then Thursday, it finally blew over that top at 110, and this thing just exploded. Exploded all the way up to 126. Now it's been pulling back and consolidating. This thing could keep pushing, or it could start to fall back off, back down to this $110 level. I'm going to take Sava off my watch list now because it already did its deed. And the price is too high on it for really day trading. This is more of like option trading at this point. Because $100 per share, when it comes to day trading, you'd have to put up a boatload of money just to buy 100 shares, 200 shares of this. So for options traders, this is good to watch. I don't trade options, so I'm going to take this off my list, move on to other opportunities. Other opportunities I think are worth keeping an eye on, something like GRWG. Now this is a new one. See, recently, this just had a big sell-off right here. From $44 all the way down now to $31. Nice $12 drop to the downside. It's still pulling back. See, it's getting driven down lower and lower. I want to keep this on watch, most definitely, for a nice rebound on it. The more selling pressure that comes in on this, the more it panics, the better. I don't want to force this and try to be a bottom picker because look what happened. Everybody that got in on this thinking this was the bottom right here. They start getting in on it, and then they swing it, and then all Friday it just got driven down, driven down. I mean, this went from, what was it, $36, and they driven it all the way down to $31. They drove it down $5 per share more. So that hurts. Never try be a bottom pick. Never. And if the stock starts going against you, should not be averaging down or looking at this as, ooh, I can get it at cheaper prices. I'm going to buy 100 more shares. Ooh, it keeps going lower. I'm going to pick up 100 more shares. Because who knows how far this thing could get driven down. This thing's in straight up free fall mode. Look at that daily. Look at that. This thing's just fell through the 200-day moving average. And it's right here. This thing can free fall all the way down here to 20 bucks, which is another $11, $12. It could free fall. And then if it falls below that, this thing could free fall all the way to $5. Who knows how far this could go? Don't be a bottom picker. And if you look back right here, look at how far this got driven down. So remember, guys, just because stocks have big, violent sell-offs like this doesn't mean it's guaranteed to bounce. All right? As a matter of fact, and I love using it as an example, look at Discovery Channel. Remembers when this had a big sell-off right here. Now you see, this is a daily chart. So this happened back here when? Back in March 25th. It's August 15th. So 5 months. And this stock is still getting driven down. Lower, 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 and lower. So think about everybody who jumped in on Discovery Channel. This had a big violent sell-off. Everybody thinking, ooh, this is at a discount. I can buy for a bounce. And it failed, and they loaded up more. Like, all right, well, that's cool. I can get it at a discount. I'll pick up 100 more shares. And then they, ooh, it's getting lower. Okay, I'm going to average down even more. All right, I'll average down even more. All right, I'll average down even more. They keep averaging down and averaging down. This stock just keeps getting hammered lower and lower and lower. They're going to blow their account. And this stock still has not bounced in 5 months. So this is a perfect example right here. Just because stocks have big sell-offs doesn't mean it's guaranteed to bounce, all right? We like to keep eyes on these, though, just in case they do, because there is a chance it does bounce. Take Sava, for example. Because when they do bounce, it could be a beautiful thing. And look at that. So you have examples I'm showing you guys of stocks not bouncing and stocks bouncing. All right. So GRWG, I think it's worth keeping an eye on for a potential bounce. This could be a nice swing trade, day trading opportunity. The more that this gets driven down and the faster it gets driven down, wait. The chart and the stock will let you know when it's ready to bounce, if it even bounces. So I want to keep close tabs on GRWG going into next week for that bounce opportunity. Who knows if it will happen? We've still had some really good opportunities last week. We really did. Friday and Friday's trading. Fridays are the hardest trading day of the whole week. Now, on Friday, things were a bit hard. For me, it was a lot of back and forth, back and forth. I really couldn't get a couple steps ahead. It seemed like I'd make a couple $100, and just when I thought I was just getting up and going, I'd get in on something and it'd take me right back. And then I'd get in something else, it put me back, I'd get going, and then I'd get in something else, and then it would bring me right back. So it was just a back and forth, and you really had to be picky about what you've traded. Thanks for subscribing, MHD Messiah. Welcome to the Wolf Pack. So you really had to be picky about what we traded on Friday. I pushed up over into the green. It was like $500. I said, guys, I'm done. Not going to sit here all day and battle back and forth, back and forth. It's been a phenomenal week for me. I went green every single day. I'm happy with that. And we need to focus on consistency. Consistency. You focus on consistency and that mindset. I want to live to trade another day. I want to be here tomorrow. Don't blow your load on just one trade or one stock, guys. It's not worth it. Stop going after those home run trades. Focus on closing green every day and have that big goal be I want to close green for the week. Doesn't matter how much it is. As long as you focus, I want to close green at the end of the week, that's where consistency starts to follow. I'm not trying to put a cap on myself, guys. I'm not. Every day I show up, I don't have a goal that I put on myself. I'm not coming in here and saying, hey guys, my goal today is to make $2,000 or $5,000. I don't want to do that because I'm putting a cap on myself. Put a cap on yourself, you're limiting your potential and the opportunity of how much you can make. That's the way I look at it. So if we come in here, guys, every single day, and we just have that mindset, I just want to close green for this and close green for the week, it'll lead into consistency. Singles add up. They really do. So let's, just as an example, and I want to show this to you guys, just to drive home the importance of when you're up in profit, be done. Walk away. There's no reason to hang around the entire trading day and trying to force trades and make money and add on to your P&L. Because what's going to end up happening is you're going to overtrade, you're going to take stupid trades, you're going to take not A plus setups, you're going to be taking them B plus setups, them C setups, and you're going to give back profit, going to mess with your head, and it's just going to be a twirling downfall. So every day in the chat when I'm with you guys, at about what time am I done every day? I tell you guys, and I post my P&L, usually at around 10:30, 11 a.m. Say it, guys, I'm done. I did my job for the day. I'm green. I'm happy with it. And then as the days go by, guys, it adds up over time. It really does. Just to drive home the consistency with you guys. Starting on Monday, just to start the week, $1,500, 1,500. That's a good start to the week. It gives you something to build off of. That's the way I look at it. I'd much rather start the week green than red and in the hole. So Mondays, my goal, I want to play it safe. If I can push up $500, $1,000, that's good. That's given me a base to start to build off of for the upcoming week. That makes sense. If I start the week red, now I'm down in the hole, and then going into Tuesday, I have that mindset of, man, I'm in a hole and I got to dig myself up out of this hole, push into the positive. I don't want to be in that situation. So Monday, we start off and make 1,500. Then going into Tuesday, come into the market, have that confidence, know you're up in profit, have a good base to build up off of, and you could start building up off of that end. Like I said, guys, I'm not even pressured to take trades. Even $1,500 to start the week, that's somebody's whole paycheck for the whole week working a full-time job. So that's a good start to the week. Try to find it here. I got to scroll up. I got to start posting profits chat. That way I can easily pull it up. So now we're in Tuesday. I got my base built from Monday. Now Tuesday, I close out a little $1,400 profit. First 2 trading days of the week. Now I'm up $3,000 on the week. Now you guys see where I'm going with this? These singles, they add up. I'm done Tuesday now. Great job. Doubled for the week, my profit. Now going into Wednesday, hump day, I'm up 3,000 for. Now I can chill out. All right, that's good. Getting my confidence going. I'm on a roll, and I'm telling myself as well, I'm visually aligned with the market. I'm seeing what's going on. That's where I'm getting my confidence from. If I can pull this profit every day and consistently, makes you stay safe. And I also have something to build off of. So now we're going into Wednesday. And I'm doing this because I really want to drive home to you guys. The consistency and singles add up. It really does. Take it a day at a time. No need to go for home runs every single day. So now we're in Wednesday. My day is done. I traded one stock out of the open and just going to protect today's profits. What a home run trade on AHPI. Sure, I could have made more if I held, but my main focus is to pull green every day. No matter how much, if I can do that, I will continue living free. Let me repeat that. I could have made more, or if I held, but my main focus is to pull green every day, no matter how much. If I can do that, I will continue living free. And Wednesday, I made $4,200. So I made $4,200 on Wednesday. That's a home run day, for real. So now, for the week total, guys, and it's Wednesday, I'm up 7,000 in profit on the week. That's a phenomenal week. I could quit right there for the week if I want to. In reality, that's 2 months of somebody's salary that I've made in 3 days. That's the potential the stock market gives you guys. And I'm being humble. I'm taking that. I'm not getting greedy. And let's, real quickly, let's see what AHPI did on that day. and I was done all within the first 15 minutes of the market open on AHPI. AHPI, I swung it overnight because this stock got beat down on Tuesday, and I bought in on this near 11 with 3,000 shares. The next day I woke up, I sold it right into the morning. You guys remember when we were doing the pre-market prep? Nice ramp up over 12 with 3,000 shares, and I'm making $1, just over $1 per share. That's a good profit. I want to lock that in. And I locked it in at 12. This thing ran all the way up to almost $16. So I left $4 per share on the table. I wasn't getting FOMO. I wasn't saying, oh man, I could have made even more money if I held on. I don't want to think like that. I don't want to get greedy like that. My main focus is to get a slice of the pie, out of the whole pie right here. Out of that big slice of pie, if I can just get a small little slice of that pie, which is me right here. That's all I want. Bad coloring. If I can get a little small slice of the pie like this every single day, that leads into consistency. So that would be Monday, Tuesday, Wednesday, Thursday, Friday. So if out of the whole pie for the whole week, I've made that much, I'm fine with that. Out of all the opportunities that are out there, I'm perfectly fine with that. Remember, we want that mindset. We want to live to trade another day. Have that mindset. I want to show up and be here tomorrow. Because how many of you guys got overly greedy and aggressive, over traded, and you got caught in something like over trading AHPI, and you get caught in a death candle like that, and you give back half your profits or all of your profits because you got greedy, over traded this thing, and you got big eyes and you wanted more, right? So out of the open, I'm selling at $12, making just over $1 per share. I'm happy with that. So what if this ran up another $4 or $5 per share? I got mine. That's all that matters. 4,000 in a day. I mean, come on. That's a whole month of somebody's salary. Get it? I'm happy with that. And I'm going to continue to live free. I don't have to go to work, listen, and have somebody tell me what to do. I can show up, do this from the comfort of my own home every day, do whatever I want. Yeah, I'm going to take that. So that's Wednesday, right? Now we can go into Thursday. 2 trading days left in the week. I'm up 7,000 in profit. I'm like, yeah, let's go. I don't have to be aggressive. Now that we're at the end of the week, I can just coast it out if I want. I don't need to be aggressive. So now my main focus is protecting my profit, right? Not yours if you can't protect it. So in the market, you got to play both offense and you got to play defense. So going into Thursday, I forget what we did on Thursday. Just take it a day at a time. Day at a time. Focus on singles. Focus on pulling green. That's all that matters. Roll up here. So on the August 12th, Thursday. Another solid day for me, up 2,000 on the day. I was up more, but I gave back some. I'm taking that as a hint. Wrap it up and call it. So Thursday, I made 2,000. Now I'm up $9,000 on the week. I was up more in profit, but I noticed, hey, I'm over trading, and I started to give back some of my profit. I think I was up just over 3,000 on the day. So I gave back 1,000. I took that as a hint, like, yo, be done. Wrap it up. You're being aggressive, you're being stupid, you're over trading. 2,000, that's a solid day. Closing it out, being done on Thursday. Now we go into Friday, guys. Friday live stream trading. Had a phenomenal week. It's the last trading day of the week, right? You could just kick back. Fridays, I look at Fridays, if I'm up on the week good and in profit on Fridays, I want to coast it. I consider Fridays like wallet patter day. I'm not being aggressive. I'm playing it super safe. I'm being very patient. I'm not placing a trade unless it's an A plus setup. And I only want to stick around and trade on Fridays, maybe the first hour. Every moment that goes by on a Friday, we just lose more and more and more volume. So Friday, we took a few trades here. We traded 5 different stocks, but I wasn't going big with my size. I only closed out Friday. I only made $500. That's still good though. I'm closing out the day green. I noticed how choppy and wild it was on Friday. I didn't want to overstay my welcome. And on Friday, guys, it's important. Want to close up and be done. Because after Friday, as traders in the stock market, we got Saturday and Sunday off. So if you took a bad trade or a red day on a Friday, now have the next 2 days to have that on your mind. Then when Monday rolls around, you're going to be eager, excited. And if you took a red day on Friday, your first thought on Monday is, I got to make that back. I got to dig myself up out of a hole. So you're already starting off on the wrong foot. If I can close green on Friday, or if I don't take any trades on Friday, I want to start my week on Monday with a fresh mind. I know I just had a great profitable week last week. I'm proud of myself for that. Now I can go into the weekend. It motivates me to study, break down charts, look for opportunities that are out here, prepare for the upcoming week. And then now on Monday, I have a clean slate. I can wipe it clean. I forget about how much I made last week. My account balance is at 0. And we start the process all over again, guys. And you start and you build from there. Every single day you guys show up, every single day you have to show up and be mentally prepared every single day. Remember, all it takes, one bad day or one bad trade to wipe away days, weeks, or even months of your hard work and profit, right? So being mentally prepared, showing up every day, run through a little prep with yourself. Is there anything on my mind? Any distraction? Am I prepared? Did I get a full night's rest? A lot of people uh make fun of Ross Cameron every day when he starts a stream. He goes, "All right, guys, answer the 3 questions. Did you get a good night's sleep? Did you eat something? Are you feeling good?" People make fun of him for that. He's telling the truth. You have to be 100% mentally there and prepared every single day. Because all it takes is for one bad day to destroy you. That's why being a trader in the stock market super hard. You have to look at yourself like you are a professional athlete. Every single day, show up. You have to be on your A game. Because if you're not, you're going to get crumbled. And then you have to man up or woman up and admit defeat, which nobody likes doing, period. Nobody likes to admit they're wrong. Why a lot of people, they overtrade. They keep digging their hole deeper. They don't want to accept failure and loss. Why a lot of people blow up accounts so quickly. Can't handle their emotion. Tomorrow is a new day. You got to tell yourself that. So wrap it up. Call it a day. Admit defeat. Show up the next day. Never know the opportunities that lie ahead the next day. One day may be super hard in trade, but then the next day you could see 5, 10 stocks just effortlessly pop off. See a stock run from $10 to $100, and you're like, oh my goodness, look at all this opportunity out here. Yesterday, I was over trading. I used all my day trades. I'm under P. It's all about, man, it's all a big mental mind game we play in this game, guys. It really is. So getting through all of that, adapting to the market conditions, guys. Things are slowing up. Volume's been drying up. August, September is the slowest trading months of the year. I've stated that even in last week's prep. Week before, that August is the hardest time to trade. August, September. Get in, get that money, be done. Don't overstay. So AHPI offered a lot of really good opportunities last week. This thing was ripping from 11, 16, 12 to 15, 14 to 16. Every day, this thing right out of the open was running up $2, $3, $4 per share. I'm going to keep AHPI on the watch list simply because this is a low float stock. I want to pay attention to these low float stocks. The float on it's only 3 million. This could easily get back up over 15. If it gets over 15, it can run up to the high at 1650. Next stop could potentially be 20 bucks. So never underestimate low float stocks. Never underestimate. I mean, look at right here. When this thing ran up 16 and then it crumbled all the way down to 10, it looked toast done, didn't it? Then the next day, this ramped right back up to its highs. That just goes to prove and show you right there that you should never underestimate these low float stocks. Never. Never do that. Got ACY. I'm going to keep on the watch list. I'm going to keep this on my watch list simply for the fact this is on parabolic watch. It's lingering around and hanging up there at its highs. No traders are going to be paying attention to this name and this stock. The float on this is only 1.2 million. It's a nano float stock. Super, super low supply. Look at the big rips on this. The first day right here, from 17, it ripped all the way up to $33. I mean, come on. That is a rip right there. Next day, thing runs from 25 all the way up to 36. That's a $11 per share rip to the upside. People are going to pay attention to stocks like that. That's money. And think about it. Stocks ripping $5, $10 per share. Got your big money traders out here. They love stocks like that because they can easily pick up 5,000, 10,000 shares. Stock rips up $5 with 1,000 shares. That's $5,000. Now 10,000 shares, stock rips up $5. That's $50,000. So these big money traders, they can make big money really fast with these stocks. That's why they're going to be paying attention. This is where they can make their money, bulk of their money, for the whole year. That's where the opportunity lies, right? So then on Friday, ACY, it was a bit choppy. A lot of back and forth action. This grinded from 31 all the way up to $40. I mean, even on Friday, this ran up $10 per share. We were watching this on Friday here. ACY was in sync and in sympathy with AMC. And anytime AMC was the leader as well. Anytime AMC would start to run up and go, ACY had a few second delay on it and it would start to run up with it as well. And you pick up on that, guys. And if you guys were with us in the stream on Friday, you guys all remember this. It's all about being observant, paying attention to what you see going on across the board. Real quickly, ACY here. This thing went from 36 and in a blink of an eye, this thing skipped up to $40. Just you blink and it's at 36 and you blink and it snaps up to 40 and it ripped back down to 38. It happened so fast. And then look what they did. They consolidated it. They trapped longs and then they sold it off at the end of the day. But ACY, I'm going to keep this on parabolic watch, guys. Never underestimate these nano float stocks. Never. And it just goes to show there's still opportunity out here. And a lot of people got caught up in SPRT. SPRT was the #1 stock gapping up on the gap scanner. And in the watch list on Friday, we said SPRT, it's not even worth keeping your eyes on. I mean, look at every day, guys. I put my watch list out for you guys. On Friday, August 13th, right there, I didn't have SPRT on my watch list. Didn't even have it because I knew it wasn't going to do nothing. I don't want to pay attention to these stocks that are overcrowded. I want to pay attention to the stocks that have been performing day in and day out. That's where the easy money is. So in the pre-market prep, said stay away from SPRT. It ran up so much just before the open. I hate when stocks do that. Right here. I hate when they run up right before the market opens. Because all that's going to do is it's going to get these traders excited. They see, wow, this thing just ran up $4. It's going to keep going. And then This thing trapped a lot of people. A lot. I don't want to be trading something like this. This is garbage. So they open it right here at 970. They quickly rip it up 1025. From 1025, this had a death candle all the way down from 1025 to $9. So it slams down almost $1.50 per share, all within the first 5-10 minutes of that market open. Then it just randomly squeezes up to a new high from 9 up to 10, almost $11. So they squeeze it up $2 per share just randomly. And then they drop it off, bring it back up, and then they sell it back down to its lows and it consolidates. That's ugly. I don't want to be in something like this. It's a lot of uncertainty, randomness. Ew. Get away from it. And look at this is a 1-minute time frame, guys. Every single 1-minute candle here on average had around 800,000 in volume. So every 1 minute on SPRT, every 1-minute candle had 800,000 in volume. That's a lot of money pumping into this stock. A lot of money. This was the #1 stock gapping up on the gap scanner. And then you got stocks in the background like ACY just trending up from 30 up to 36. AHPI had a sell off. AMC pushing from 32 up to 35. There's good opportunity out there. Get back to this watch list. Robinhood, HOOD. Now, how many of you guys forgot about Robinhood? Robinhood, all of last week, pretty much, just got demolished. Here at 57, this sold off all the way down to 48. Then on Friday, Hawk Driver called out Robinhood on Friday. I had it on the watch list. Right here. Friday, August 13th, Robinhood was my #2. And we were paying attention to ACY. But Robinhood was a nice trade. This thing went from 48. It ran up to 51. Pulls back, holds previous day's close as support at 48.50. And from 48.50, this ran all the way up to 53 bucks. I mean, that's $5 per share run right there, guys. There's opportunity out here. We just have to be picky about what we trade and wait for setups to set up. I mean, Robinhood didn't even set up and run till 11 o'clock right here. That's where we should have been entering in on Robinhood, right at 11. So that's an hour and a half after the market opened. And from 49.50, a good run up, 53. We also had BYSI on the watch list. I was anticipating and waiting for this to have a good bounce because this had a phenomenal run back here from 23 running up to $30, and it was just leveling out right here at 23. We were looking for it to break 24, and this could have a good run to 25, 26, maybe 27. But Friday, it stalled out right at that 23.50 and just crumbled and fell apart. So it was right here. That's when I knew I was done for the day, because I traded BYSI. I was going to take a swing on it, and I took $1,000 loss on it. So I was like, guys, I'm done. I'm taking my $500 and closing it out, because the last thing I want to do be up green on Friday and then foolishly give it back and then turn around, look at the clock, and it's noon on a Friday and I'm still sitting here trading. I don't want to be that guy. So BYSI at best, I'm going to take it off my watch list, but what we can do, we could put a few alerts on BYSI. So I'll put a alert on this at 23. Then I'll put another alert at 22.50. Get used to setting a lot of alerts on or just in general, guys. It's good to set alerts. Don't be afraid to set alerts. And if you're uncertain on if you should keep a stock on your watch list or to take it off, like with BYSI here, I'm telling myself, all right, I'll take this off my watch list, but I'll put a couple alerts on it. That way, when I do take it off my watch list and I'm paying attention to what else is going on, if these alerts get triggered, I can easily pull it right back up, reevaluate it, see if it's worthy of throwing back on my watch list. That makes sense? Keep in mind, guys, there's over 2,000, 3,000 stocks in the stock market. We're going to see so many stocks pop up, be in play, and then slowly fizzle out. New stocks are going to pop up, be in play. So you constantly always have to be jumping around and not just getting comfortable and overstaying your welcome with these stocks. Remember, we're trading garbage companies. Garbage. You're not marrying these stocks. I don't care what these stocks do. For all I care, these can be abortion clinics. I don't care. If they're volatile, they move $5, $10, they're tradable. That's all I'm looking for. There's no offense out there. Abortions or clinics or whatever. Not getting into that. I'm just giving you guys examples. I don't care what these companies do. There's value. Stock is volatile. It moves $1, $3. It's tradable. People are gonna trade it. That's all that matters. We're here to make money, not long-term investors. Appreciate it, DNA investment. Good stuff. These Sunday videos are underrated. Top right corner of your layout, what time frame? This right here? This is a 65-minute chart. So 55-minute time frame. Miami 65-minute time frame. I use 65-minute time frame, guys, because I don't believe in 60-minute charts. Because if you honestly think about it and do the math, how many hours are in a trading day? How many hours are in a trading day? Market opens at 9:30 and closes at 4. So the stock market's only open for 6.5 hours, right? So if I'm looking at a 60-minute time frame, market's only open for 6.5 hours. I'm going to be missing data at the end of the day on my chart. I'm only going to get 6 candles. I'm going to miss a half an hour of data, right? So if I just add another 5 minutes onto the chart, I'm going to get an extra candle versus somebody who just strictly looks at 60-minute charts. Just all personal preference. See how on the 60-minute here, that red candle just below that blue line. Now, if I go to a custom 65-minute, see here, that candle is sitting just above that blue line because I have an additional 30 minutes of data. And it even evens itself out for the whole week as well. 6.5 hours every single trading day for the whole week. What is that? I'm not good at math. So 6.50 times 5, that's 32.5 hours. So every week the stock market's open 32.5 hours. You're looking at 60-minute charts, you're going to be missing data. Sure. And yeah, Brian Shannon, he's the one that taught me this. It's actually brilliant. All right, let's keep the show going here. We talked about Robinhood, AHPI. All right, I got a good one for you guys. FULC. This was another stock that offered really good opportunity last week. Here back on Tuesday, this thing ran from 12 all the way up to $22. Look at that. All day, nonstop, just running. This was an ATM from $12 all the way up to $22. I mean, that's look at the opportunity there, guys. Come on. And then gets a nice gap up the next day to 25. Friday, this had a good move from 21.50 all the way up to 25.50. Nice $4 run right there. So going into next week, Monday, look for FULC to continue pushing. Setting up nice here on the 65-minute. See, it's getting a nice rounding bottom there. Could round out and retest its highs and keep pushing. Even on the 10-minute, setting up, pulling back, rounding out. So we don't know if this is going to gap down or if it's going to gap up. We're going to keep it on our watch list. It's right near its highs at 25. Stock has proven to us in the past that it likes to run. I'm going to keep it on watch. Now here's the special one. FLGC. Every single day. Every single day. We had FLGC on watch last week. Here on Friday, I had FLGC on watch. Get my marker. On Thursday, August 12th, I had FLGC on watch. Wednesday, I had where is it? FLGC. Tuesday, I had FLGC on watch. Right there. And then on even the weekly watch list, and on Monday, I had FLGC on watch. Every single day, I had FLGC on watch. And Friday, it finally did its move. Scroll out on this. This was setting up, and we all seen it. I got a plane flying by. So this was setting up, and we were seeing it all week, right, guys? If you're part of the Discord chat, was setting up a nice big wedge on it. Nice big wedge. And we were saying, guys, if this breaks over 14, where this red line is, this thing's going to get going and it's going to explode. Well, come Friday, this thing ran up to almost $18. It ran up $4 a share. This was the talk on Friday as FLGC started to perk up and run. And then even going into power hour, this thing had an explosion. From 14, it pulled all the way back and then held that 14 as support. Because if you guys remember and look back, look at that 10-minute. How many times did FLGC come up every single day last week and touch that $14? Right there. It did it so many times. Look at this. 1, 2, 3, 4, 5, 6, 7. It touched $14 7 times. And when it finally got up over it, it pulled back. And look at it held as support. Easy like that, guys. Easy. And from 14 runs all the way up to $18 at the end of the day on Friday. So we were on the right track last week, keeping our eyes on FLGC. And it just goes to show we can have the idea of what could happen. It all comes down time. It's the hardest thing to master. You'll can't even master it. It's something all traders struggle with. They could see what's setting up and the opportunity that could arise from the situation. It's just all boils down to when it will happen, right? Even last week, when was it? I think on Wednesday or Thursday or something, I put BTBT on swing. Said, hey guys, this is looking good for a nice reversal. I could see it running up to 17. It's just a matter of how long it will take to get up there. Well, this thing right here bottoms out at just below $14 and gets a nice ramp at the end of the day to 16. I was $1 short, shy of the area I called out. This was back on August 10th, Tuesday. Tuesday here. We're going to have to scroll down a little bit. There was a lot going on Tuesday. Yeah, AMC was getting drilled on Tuesday. On BTBT, watch it, guys. Right there. She is about ready. BTBT is just about ready. I put it on swing to 17. So Tuesday, I seen it setting up here after it was getting just demolished and killed off its highs. Bottoms out, 14. Nice push at the end of the day. Right there. Beautiful push. This all comes with time, guys. Gotta remember, I've been doing this now for 6 years. I've seen this stuff so many times. I have all of it burnt into my head. Even when I'm streaming with you guys on Fridays, you guys always see me randomly throughout the day just take snapshots of charts and quickly break it down. And look at it. I save all of these charts. All of these are charts. All of these. I have folders and folders and folders and folders of charts. Anywhere from candlestick patterns, chart patterns, charts, China stocks, epic charts, huge run-up halts, lessons, masterclasses, mid candle breakout, morning setups, my trading strategies, pump and dumps, random picks. I mean, there's all kinds. And these are all throughout my career. Look at all these epic charts. All of these are epic supernova running stocks. And I'm going to save it, learn from it, because it will happen again. It will. Look at this. Save it, break it down, learn from it, move along. That way, in the future, you've studied this image and burnt it into your head. If you see it setting up and forming real time, you're going to say to yourself, man, this looks familiar. I've seen this. That's where your instinct comes in, takes over. Trust in yourself. I mean, look at this. Great opportunity, guys. GLSI. Running from 12 bucks. $12 per share. $12. Thing ran. It ran up to $162 from $12. From about 10 o'clock. 3 o'clock, pretty much. So in 5 hours, this thing ran up $150 in one day. One day. This is a 1-minute chart. $150. And you just start to learn from this stuff. Like I said, like when the stock gets up above that 20 bucks, look at it, how much this thing's you're training your eyes to how volatile a stock can be up at these price levels. I mean, look at this. It's it's running every it's running halt, running halt, running halt. And this thing is just 40, 50, 60, 70, 80, 90, 100. It's just wild, wild. So you train your eyes to get used to this stuff. That way, while it's happening real time, studied how prices can move once it gets up above 30, $20, how wild things can get and be. That's what it's all about, guys. I mean, that's opportunity right there. Think about that. You bought 1,000 shares at $12, and in one day, let's say you bought 1,000 shares at 12 and you went and took a nap, and you come back at 2 and the stock's up at $150 a share. You just made $130,000. That's insane. Oh my, hit the lottery. That you'd be jumping off the walls. Imagine that. That's insane. That's the opportunity the stock market gives you guys. That's why I show up every single day, because you don't know the opportunity that could pop up. Look at KOKD here from the past. The morning, guys. Look at this. At 10 o'clock, around $20 to 10:30 in a half hour, 30 minutes from 10 right there. The stock was at 20 bucks. $20. In a half an hour, this ran all the way up $60 in a half hour. So that's a $50 run up, or a $40 run up right there. In a half, 30 minutes, runs up 40 bucks. 1,000 shares, that's $40,000. That's somebody's salary for a whole year in 30 minutes, one trading day. That's why we show up every day, guys. Do not know the opportunity that lies ahead. It could be something insane like this. That's best job ever. Hands down, best job ever. Nowhere you can go make this kind of stupid money. Nowhere. FLGC, we're going to keep this bad boy on watch, most definitely, for a continuation. It's still got to run up and test potentially $20. If this breaks up over 20, watch out. Things could get going. All right, we got ABCL. This was one I picked up off the screeners. So ABCL here, I was looking at this. This had a good run up. It did. And what happened, I think the stock got squeezed or it bottomed out. Because I'm looking at this on the 1 minute, and what I see, this thing made it was clearly wedging out right here on Thursday. And then as it went into after hours, it crumbled and fell apart here. Shorts pile in and get in on this. And then the next day, it's gapping up and it just squeezes all the shorts, and this just had an epic run. From $15, this thing ran to $19. $4 move to the upside, all within the first hour and a half. I bet a lot of you guys didn't even hear or know about this stock. This was down at the bottom of my stock screen. Just the volume on this. ABCL. It had 10 million in volume. ABCL. Versus, what was that hot stock of the day on Friday? SPRT. Look at how nasty SPRT was on Friday. Guess how much volume it had? 83 million in volume. So SPRT did 83 million in volume, and ABCL did 10 million in volume. And look at how cleaner this stock is. And it did 8 times less volume than SPRT. Number one stock gapping up. And all of these gurus out there tell you guys, focus on stocks that have the most volume. No, stay far away from the stocks that have the most volume, because it's going to lead to randomness and choppiness and unpredictable, uncertainty. You have too many personalities, trading strategies, beliefs in on something like this. Look at how choppy and nasty it was, right? Versus something that just did a little 10 million in volume on the day. Right from the open, runs up $4. And the rest of the day, it was in a range from 1750 to 1850, going back and forth, dollar. And that could have been opportunity for some people right there. Just buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, back and forth, $1, back and forth. So 1, 2, 3, 4, 5, 6. 6 times with ABCL. Just an example, guys. So the stock had a range of $1 per share. And 6 times it went from 1750 to 1850. 6 times. So total could have made $6 a share just trading it back and forth like that. Once again, that's where I see opportunity right there. All see opportunity in different places in the stock market. All of us. Even if you wanted to be strict with ABCL, I mean, buying as it touches VWAP and selling to the pops. Look at all the times it just came and kissed VWAP right here. From 18 popped up to 1850. Even that is 50 cents scalp opportunities. It's all about where you guys see opportunity, right? I'm actually gonna take my face off chat, off the. I'm jiving for and I don't like smoking live like that. So, are there any stocks you guys want me to cover and break down for you? Go through here and read some of the comments you guys are talking about. And give me 1 second as well, guys. I'm gonna actually refill my water real quick. Give me 1 second. All right. What we got here? Some of you guys commented this stuff a while. This is the first time I'm looking at these comments. I've just been going in on this stream. Nice week, bro. Appreciate it, JBATL. Cannery Wharf Money says, do you invest your spare cash in the market at all? I do not. I'm here day trading every day, consistently pulling in money. That's the goal. Plus, this market is so far gone. No way I'd be wanting to invest at these high prices. Want to try to sit on cash, wait for those opportunities for corrections and play or stuff. Because when these corrections happen, I way back, way back here when this stuff happens, that's where you make your money right there on the rebound. Wait for panic and everybody to jump off the roller coaster. Some good moves on CODX, CVVMC, SESN. All right, we got some stocks we'll jump in and cover real one. CODX. Yeah, CODX did have some good moves. I see really just one opportunity on CODX. I'm not sure of what the news was, but this thing popped up here after hours. And then pre-market, it looked like it was dead in the water. Market opened, it flushed down, and then it just randomly runs from 10 up to 1150. A nice 50% retracement. That would have been your opportunity right there for it to retest its highs. Then after that, it just stalled out. Everybody gave up on it, and it crumbled. That's what I see. But going forward, I'd look for it to hold up above. I mean, I really wouldn't want to see it go back down to 10. I don't know. This one, it's a light volume stock. Not much volume in on this. You're getting like at most maybe 200,000 shares when it starts to up and go. You got to be careful with that because what it could potentially lead to are some nasty flushes. And you can get caught up because all it takes is for one person to ruin it for everybody. You know, that moron that decides to hit market sell 10,000 shares. And you could just light volume like that, got to be cautious. Even if you zoom in on this here, see it spike and then the red candle right after it gives back majority of what it spiked up multiple times. You see that. So it's like you got to be selling as it's pushing up. CODX, not my style, but that was like all right one, I guess. Other one here. DVV. Dang, this thing popped. But once again, low volume. At most, it's getting like 200,000. That's that. You got to be careful with that, man. Like I said, it's not my style. I like to trade stocks that have a bit more volume. Like I said, man, all it takes is for one person to ruin it for everybody. And the flushes are just nasty. I mean, look at here. It grinded up to 550 and then it just instantly flushed all the way down to 5. That's a 50-cent flush. It gave back everything pretty much it grinded here. And then got a nice pop here. But then when you zoom in on this, I mean, look at that. This thing went from 590, it skipped up to 640, and then it flushed all the way down to 550. So it flushes down $1 on you. Imagine if you were that person trying to get in on that momentum and it filled you up here and then it slammed down like that. And look at the volume. only 188K. I don't like playing around with stocks like this, man. To me, it's like playing with a loaded gun. It could, old, rusty, never clean the barrel gun. I mean, it can shoot and have a good kill, but then it could also backfire and blow up in your face. That's the way I look at it. Be careful with those low volume type plays. I like to look for a little bit more I mean, at least for me, stocks need to be approaching, and when they have spikes, at least 1 million in volume when people come into it. If it works for you, man, it works for you. All that counts at the end of the day. For me as a trader, like I'm buying 1,000 shares, 2,000 shares. That's another thing. I can't be getting in with that size and risking flushes like that with low volume. I'll have a hard time getting out. So here's another one. I could tell you're a very low volume type of trader. Every run up, it gives back all of its gains. Runs up here to 425, crumbles and falls apart. See what I look for? I pay attention to detail. If a stock is going to have a run up, like look at run up and it's given back over half of what it ran up. Run up, it's given back over half of what it ran up. Run up, right there, given back half what it ran up. Run up, given back half of what it ran up. Run up, given back over half of what it ran up. Run crumbled. It crumbled faster than it ran up. And it's given back over half of what it ran up. When I see stuff like that, I stay away because it's just not worth it. That's my opinion. But who would want to get in on something? This is just my opinion. This thing pushes from 322 up to 350. So it pushes up 30 cents. And then from 350, it crumbles down to 320. So it runs up 50 cents and then it flushes down 30 cents, giving back over half of what it pushed up. I don't like stuff like that. Like I said, if it works for you, works for you. I don't too low volume, especially if I'm trading if I'm running a community like this here. I easily have 100 people in here. If I put alerts out on stocks that have super, super low volume like this, I'll essentially be running a pump and dump chat room. And I'm not trying to do that. Makes sense? Last thing I would want to do, get in on something and then say, hey guys, PMCB, I could see it running. And then have a few people market order in and push me up in profit and I sell into them. I don't want to do that. So Rome C says NAOV. Check that out. NAOV. It had a good run up recently. but it's giving back a lot of its profits. It can't hold its gains whatsoever. So you see here, did have a pop there, gave back almost all of its gains. Quick pop there, couldn't hold. Quick pop there, couldn't hold. Did have a good run up right here, but a lot of grindy action, grinding. And then it had a quick morning pop there, and then it just completely crumbled and fell apart. It's still holding trend if you focus on the big picture right there. This is more of like a swing trading type stock. You got to focus more on the bigger time frame. You're going to want to see that 250 hold up. But when I look in on the 1 minute on this, it looks garbage. But then when I look over on the 10 minute or the 65 minute, it doesn't look horrible. Like it's got your wedge, your breakout from the wedge, pulling back. It's holding the area it broke out from. At best, it pops back up here. 25-cent, 50-cent intervals is where you're going to have to take on this. I don't really think it's worth paying attention to. I think there's better opportunities out there. Like I said, at best, I see this popping back up to 290 right there. That's where I see it popping back up to and then falling apart. But good volume on a name like this. Now, this would be, besides the price action, when it comes to volume, this is something I would pay attention, because you clearly see, look at all the volume that's playing this name. You guys can't really see it because the chat log's in the way, but on average, every 1 minute candle, it's doing about 500,000 in volume. So that's pretty good. You want to trade stocks where you can easily get in and out. Nice clean run up here. This looks a lot better than that previous chart, simply because you got your run up, pulls back 50%. Remember, if I see stocks pulling back more than 50%, I like to stay away from that, because a stock should not give back a lot of its gain. The whole point of a stock moving forward to progressively move forward, right? Not run up, give back almost half all of its gains, and then continue running up high. It doesn't work like that. Or it could lead to choppiness and just it could be a headache. I'd much rather pay attention to stocks that have, like I said, a run up, pull up back at least 50%, and then continue running. Pull back 50%, keep running. Versus, like I said, run up, give back 80% of what it ran. That's not showing strength. That's what we kind of see here with this. Nice run up, pulls back 50%, run up, pulls back 50%, run up, pulls back 50%, run up. This is where it started to crumble right here, but it's getting a now this is where you got to measure the whole move, right? Measure the whole move. This pulled back. Oh, look at that. About 50% of that bottom top, back 50%, runs back up to its highs up here. It's all about perspective. So NAOV going forward, like I said for you, I'd see if 250 holds as your support. If it drops down below that, give up on it. And at best, this is going to run back up to 90. Maybe 3 if you're lucky. Just play the bounce if you're going to play it at all. IKNX. Volume's too low. Been trending up, but obviously nobody cares, right? Because look at how spotty it is. Even on the 10 minute. Look how spotty it is on the 10 minute. That's not looking good. That's not, people are not interested. So be careful. And you can clearly visualize there's a lot more red candles than there are green candles, right? I'd stay away from this. Sure, it could get that momentum and start taking off and running. It could. It's trending up. But volume being so light on this, it could lead to a disaster. It's super high risk. This thing's going to need to you could keep eyes on it and see if the trend holds. Because if this thing keeps trending up, more and more people are going to start paying attention to it and throwing it on their watch list to see how it plays out. And you just never know. This could lead into a parabolic runner. So I think you're on the right track. Just keep observing it, checking up on it, see if it keeps holding that trend. All right. Who knows how far this could go? I see where you're going with the nano float stock on it. Got the potential. But as of right now, I would just monitor it. That's it. And what I'm going to do, Rome, I'll throw this on my weekly watch list just to observe and see how it plays out. Who knows? This all they need is a press release and it's game on, right? Thanks for calling that one out. That was a good one. A good candidate, I'd say. OPNT. This is kind of the same scenario. Volume super light on it. It's spotty. It needs a press release. If it gets that press release, it's game on. I think you're on the right track, Rome C. I do. I think you're on the right track. You're doing good by keeping these on radar. See the potential. You do. And like I said, all it needs is that one press release to get everybody's attention. This thing's got potential as well. But it's just a matter of when it will happen, right? So you could keep this on the back burner, see how it plays out. And then that one morning, you wake up and you see it's on the gap scanner and it's got a fresh press release. That's when you know that it's game on. I've been having this on my radar. All I've said it's needed was a press release to get volume to it. The stock gods listened. I asked, and I shall receive. They gave me my press release, and you feel more comfortable and confident, right? Because now you got the volume's attention. It's on the #1 gap scanner in the morning pre-market. It's your top candidate. Had eyes on it. It's game on. So I see where you're going with this. So Rome C, I like it. Good job. Just hold off. Hold the line, as they say. Keep tabs on it. LXP. Well, bit bigger on this name. It's a pharma. Right now, currently, it's failing. Solid uptrend, though, on that daily. I mean, this is more of like a swing trade stock. Gotta be careful with these pharma stocks because they're just money hungry monsters. Their whole objective and goal is to get money to fund their next trial. So I'd be careful with this name. I wouldn't pay too much attention to it because it's been trending up for quite some time. River Place Dad said, "Your opinion on what happened GRVN on Friday? How do you decipher good SPAC news when you know when not get in after halts?" Well, River Place Dad, to answer your question on SPACs, my experience, we were just talking about this the other day. When it comes to SPACs, you have to play them while they are hot that day because they quickly burn out and fade out. So it's kind of like oil. When something happens to spike oil, it's in play for a very limited time because it's got that energy spike that hit it. But then the longer it goes on, it's going to quickly fade out and fall off and go back to normal. You got to kind of look at it as I think you spelled the ticker wrong. GRVN. Yeah, cuz it's not pulling up. You got to think of it as lightning hitting an energy source. It's going to have that quick spark of energy for a moment, and as it uses that lightning's energy, it's going to lose it and then fade out back to normal. If you don't have that constant flow of energy, things are going to fall off, right? So SPACs, they're they're hard. You got to just trade them when they're hot. And it's for a very limited time. Same thing with NFT. Joseph asks, how does relative volume stock go up? Well, relative volume, I think you gotta understand relative volume. Relative volume is actually measuring a stock's average volume. So let's say a stock like, hold on, they call it RVOL, RVOL. Uh, Look at, just for example, I'm gonna throw a stock. I can't. I got so many stocks sputtering through my head. Snapchat, for an example. Let's say on average, okay, Snapchat does, so every black line here, Every black space like this is a trading day, right? So let's say on average, Snapchat does 1 million volume on average, okay? What RVol relative volume does is it measures the average volume of a specific stock determined on how long you have it for, whether it be the average volume the last 5 days, 10 days, 14 days, so on. The average volume for the last 14 days. So anytime you got a spike in that relative volume, the higher it goes. Let's say it's at the relative volume is at a 3, okay? And it happened on this day right here, okay? So your relative volume's at a 3. That's telling you today that stock trading 3 times its normal volume. Makes sense? Stock is trading 3 times its normal volume, then that's telling you there's an event, something happened to drive prices of that stock. Something abnormal happened. I call it a shock wave, is what I call it, or a market shock. News release came out, earnings came out, a bad analysis came out, something came out. But all relative volume does is it's measuring a stock's average volume determined on how far you're looking back. Everybody's different. Some measure average volume the last 5 days, 10 days, 2 weeks, so on. So that's the best I can answer your question. Relative volume does not make a stock go up. It's simply a tool to measure volume, average volume. GRNV. All right, GRNV. Man, that sure was a run up, huh? So first off, why did this run in the first place? So it looks Herbert Herbit completes back merger with Green Vision acquisition. So this came out with news that it completed a merger with another company. And you could see the float on GRNV is only 1.1 million. The float. Float 1.1 million. The float is the supply, right? If I can spell. Float is the supply. That press release comes out. Volume here, 26,000. Think of it as a lightning bolt. Here's my lightning bolt. Man, I'm not a good drawer. So there's your lightning bolt. That's your volume. Volume is the lightning bolt. Hitting that supply, right? Supply is super, super low. It's a nano float stock, I call it. Anytime a stock has a supply near or under a million, I call it nano. Not much of the supply of it. So you have that volume coming in and attacking a low supply. That's what caused this to rip up so violently like that. And my situation, how I would approach this, as this is running and getting halted, I would not chase after it. No. I'd watch it run, halt, open, run, halt, and I'm not tempted. Trade it. I'm not. I don't care. This thing could run all the way up to 1,000. I'm not going to risk my money jumping in on a halt on a stock that just keeps opening, popping up, halting. Because all it takes is for you to, I'm going to enter in on that next time it opens up from a halt. You enter in on it and it halts to the downside. Now look it just reopened way over here. Way down here. From $25, it gapped down to $14. You just took a $10 per share gap down. That's not worth it. No. 1,000 shares, that's a $10,000 loss. What I would do in the situation, let it do its thing, let it resettle down like it did right here when it formed this wedge. Let the stock settle down. See how it wedged out kind of here? And either play the wedge or wait for the stock to pick a direction it wants to go. Does it want to continue going to the upside, or is it going to crumble and fall apart to the downside? In this situation, the stock fell down from the wedge and then continued to crumble and fall off. You gotta be careful with these fast, wicked movers like this. You could easily get caught up in the greed and look at it like, wow, look at it, how much money I'm missing out on right now. But as quickly as this ran up, this thing fell so hard and so fast. It's not worth it. It's not. It really isn't. So that was another fantastic, wonderful breakdown from the man, Mr. Wolf. That's right, River Place Dad. Way too rapid, no pullbacks along the way, no good entries. Plus, you don't want to develop that habit of chasing after run-ups like that, because psychologically, let's say you did jump in and chase after this, okay? Let's say you jumped in right there, right before it got halted, and then it gaps up and it pops and you sold it just before the halt again, and you scored on it and you made $8 a share. Well, you just got rewarded for a bad habit, a bad trade. So what are you going to do in the future? You see this again, you're going to think back and you're like, last time I got fucking paid, brah. I'm going to do this again. And you're going to get screwed. So if you reward yourself for doing bad things, that's a no-no. Any trader, any good trader out there would not have traded this. That's just pure, straight up gambling. Straight up. Because nobody knows how far this thing would have went or when the top was. And look, when this thing did top, they ran it up here and it halted. They ran it up and halted it at $23. So they open it at 21, they dip it down to 20, and from 20 they rip it to 23, halt it. They halt it for 5 minutes. They reopen it right at 23, and then they quickly pop it to 25. And you didn't take profit. And then in a blink of an eye, it slams down super hard to 2050. And then it's halted again. And then it's halted for 15 minutes. And when they finally reopen it from 2050, this thing reopens at $15. That's sick. No, thank you. Uh-uh. This is how people blow up accounts. This stock rate. I call this. You guys can take a screenshot of an account killer stock. Stay far, far away from these types of stocks. Not worth it. If you get caught on the wrong side on this one specific stock, sure, it does look very tempting because of how much it ran from $8.50 to almost $30. But this thing, the downfalls on it, ew, it's not worth it. Get caught on the bad side, wrong side, it's going to destroy weeks worth of your work. Weeks. Showing up every day. Locking in those profits. Profit, 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 profit. Little small profits. Locking them in. This pops up, boom, one trade. You just gave back 4 weeks worth of work. Showing up every day. That would hurt. Dang, look at SESN. Yeah, that's wicked. From $6. Ooh. They open it at 80 cents. That's nasty. Ouch. This is why you stay away from pharmaceutical, guys. Pharmaceutical stocks. Oh, not worth it. You know what, guys? Today I jumped into the stream and I had my weekly watch list all laid out. I'm like, yeah, we're going to blow through this. Every single Sunday, these streams be 2 hours. Yeah, I had RANI. I was looking at it. I was thinking about throwing it on my watch list. It is setting up. $20 gonna be that trigger level. 2021. You know what, David Friedman? I'm gonna add it. I'm gonna add it to the weekly. I mean, we got to keep tabs on it, observe it. It's just too good to pass up because this thing ran from 14 up to $30. I mean, this thing, it ran with ACY. Back on Wednesday, this ran August 11th. This thing right here. Look at that, August 11th. So yeah, I remember when RANI popped up with ACY, like they were running in sympathy. So yeah, that's a good call, Mr. Friedman. I like it's worth keeping our eyes on because if it blows over that 20, this thing could easily run back up to 22, 25. Who knows how far it could go? It could be a good opportunity. GGPI. Now this thing, this is an OTC stock, my dude. GG. Oh, it's on the NASDAQ. The barcode stock float is 80 million. No, it's not worth. I don't think this thing's worth it. That's what we call Minuteman. This is a straight up Minuteman. Working up for it. One quick pop, back to normal. Nothing ever happened. Women hate that. So stay away from this. Thanks. Was that was approach also a spec. Seen a lot of you guys in chat recently getting into these spec type plays. I mean, I myself, I don't track them. I just play them if they're in play for the day. I mean, what you call it? Trade ideas. Got a custom scanner backs. Right here. Blank check, acquisition company. Right for you guys. There's a lot of low volume on these plays. That's why I don't really pay attention to them. I think these are more of like long-term type stocks that you guys like swing trading. There's nothing wrong with that. I mean, I could see like on VACQ, this thing's gearing up, setting up. If it can break over that 12, this could run to $13, $14. Gonna want to see that $10 hold up. $10 holds up. Let this thing gear up. Hold. Now 10.50. This could pop back up to 12. Hold back, then hold as 11 as support. Build up and break up through that 12 to 13, which is right there. Then pull back, hold 12, and then probably pop back up to 13. Hold 12.50, break up, and then run up to 14. Take it in levels. Got a good base to build off of right here at $10, making higher lows. Base. Yeah, I like this VACQ one. I think for you SPAC guys out there, this VACQ is worth putting up on your watch list. Oops. Sorry, I didn't mean to do that. There's a few of them here. BOWX. I'd put this on my watch for a potential bounce. If you guys are into SPACs, this could run back up to 12. BOWX. Look at that. You got BOAC. This thing's flatlining. Right there. Nice descending wedge. Don't know which way it's going to want to go. It could go up or it could go down. See, even this one. This one's a good one for you guys too. Look at that. This thing's been trending down. It was making lower lows, lower highs. Now look at it's flatlining. It's consolidating. So while it's in that range there, it's on a daily chart. Buy support, sell resistance. Buy support, sell resistance. Buy support, sell resistance. Buy support, sell resistance. Play the range until this decides which way it wants to go. It's currently resting. After this consolidation phase, it could continue go down lower, or it could start bouncing back up. See how just simple I keep it? And just throwing a few lines on that, just paying attention to what chart is telling me. Once again, this is a daily chart. So you could see going into Monday, it's at the top of its range. So going into next week, anticipate and expect for it to start pulling back down to its support down there. Trade ideas, I'm not affiliated with them or anything, guys. I don't get no kickback. But my opinion, for $118 a month, I think it's a scanner worth having. Just simply also for the fact that you can Get all these custom pre-built scanners. We just went over specs. They got algo bots. They got 1, 2, 3, 4 different algos trading and scanning for their own stocks, and it tells you how much they're up in profit for the day with their trades. So if you think Holly, well, you got to pay more for artificial intelligence one. I'm not sure how much it is. I don't have that one. But there's our Wall Street bet. Strength alerts, EV related, NFT and crypto. They have all these different pre-built scanners. And you could go into it like this one. This is a blockchain and crypto ideal stream. Idea stream. Sorry. So just run through here and see what it's spitting out. This is how you can also familiarize yourself with the stocks within these sectors, right? Ooh, look at that run up on PFE Pizer. I think somebody last week said PFE, it wasn't done yet. He was still bullish on it. Whoever said that, absolutely correct. Better. Know how up to date trade idea short info is. To tell you the truth, I'm not 100% sure. What I can tell you though, if you go on YouTube or Twitter and send them a message, they're actually very, very, very friendly people. And they're always answering questions. And they do all kinds of streams, like I said. So I'm sure if you were to ask them that question, they'd be able to tell you no problem. Like how often they update all the info and where they pull all their info from. I mean, but trade ideas, they've been around for a while. They've been around for as long as I've been around, even before that. I've been here 6 years, and I hear nothing but good things about trade ideas. Let's see. I guess since 2003, they've been around. Let's see if they have like a frequently uh question. Popular. Look at that. They give you popular scans for absolutely free. Option, max volatility. You may think it might be confusing to pick up on the formula and the coding for trade ideas, but they have it so dumbed down. It's super easy. It really is. Not seeing ask it'll be in here. I love trade ideas, guys. I've tried other scanners that are out there. I always came right back to trade ideas. They're even gonna they talked a few years back they're gonna do their own IPO stock. Gifted for the traders that use trade ideas. Trying to quick scan through how often update. Yeah, it's I think they do those webinars. Podcast trade idea. They in probably honest. Yeah. Plus it runs on your computer a lot harder streaming real time on YouTube. That's why a lot of streamers have delays. Even video gamers will have like a little 5-second delay or a 3-second delay because if it's real time, you're going to run your computer super hard. TC2000 is really good. I like TC2000 also. I do. I actually had T1000. Still do. Barely get on it, but they have really good scans. They do. Uh, Here's what I'm gonna do. I'm gonna end this stream. I'm gonna restart it back up. I'll title it TC2000. Mess around with the stock scanner on this real quick. I'll be right back, guys.